It's my great pleasure to hand over the stage now to Grady Wulff from Bell Direct and Hedley Widdup for what I'm sure is going to be a very entertaining keynote address. Grady and Hedley, welcome. And, whoops, you're not doing Andy and Silver. You're doing the keynote address. Please take it away.
Good morning, everyone.
Morning, Grady. Morning, everybody.
I thought instead of just listening to me talk for 30 minutes, let's bring up my friend Hedley. And we had a catch up recently to talk about commodities, and we thought, let's deliver this to the world because it was bloody great, if I do say so myself.
And I thought if there's an opportunity to be on stage with Grady, then people will stay to watch me.
So thanks so much for joining us today. We absolutely love working with the Resources Rising Stars team, and we thought we'd talk about the commodities space because, Hedley, what a start to 2025. Gold has just hit $2,900 an ounce. Did we predict this in Adelaide last year? I didn't. I said 2,600. I think you got pretty close to 29.
I think I said 2,700, and the day we were measuring it, I think, was Christmas Day. And I did wake up on Christmas Day and have a look, and I think it was closer to 2,700 than 2,600. So.
Okay, well, we all know Hedley's the winner here. Let's talk gold. I think there's no way we can not talk gold today. Gold, the tailwinds are seriously there. I get asked all the time, what's the price of gold going to hit? And I just look at it and I go, the tailwinds, so there's so much drive in gold. People's Bank of China buying up more bullion than ever before and more than any other central bank in the world. There's not enough high-grade gold coming through, not enough supply, so undersupply. Mm-hmm. Investors in the market, every week we get data at Bell Direct looking at what investors are buying into, and it's banks and gold right now. Gold ETFs, gold miners, gold bullion, anything they can get their hands on because of the safe haven nature of the commodity. It's a tale as old as time. And then we look back as well, geopolitical tensions, where do you go? Gold. Inflation, gold. USD, gold. It's all gold right now. So what are your thoughts?
Well, I think you've made a great point about the central bank buying. That's what's been pushing the price of gold. But what a lot of us in this room are interested in is the equities, and that has seriously lagged. I mean, the producers have done well, but if you compare that to previous gold bull markets, they haven't performed as well as you would have expected them to for the kick-up that you've had in their revenue line. And what's the reason for that? Well, if the People's Bank of China likes buying gold ingots, they certainly don't buy gold equities. So, and within that, we've also seen one of the biggest disconnects between gold producers and the gold explorers and developers. Yeah. So, at some stage that catches. So when you say to me, what's my read, what's most interesting to me, and what's the outlook for 2025? I mean, in gold, that is one of the most exciting places to be looking because there are a lot of promising, waiting, underappreciated deposits of gold in the ground. And that's just a fabulous opportunity in my mind. So I'll talk a bit more about that in my line presentation because we've seen performance on that as well. But so gold, great. But it's not the only story in town. It's just the commodity which seems to have let us out a bit of a funk of sentiment. And, you know, what else do you see, Grady? You know, the Bell's clients are looking at gold. There's going to be something else that comes along as well. So where are you casting your mind?
I like looking at the spec buys at the moment to see where our clients and our analysts are kind of aligning. Now, NdPr, well, I'm not even going to try and say the name, I can't say it, rare earths, was the kind of commodity a few years ago. We had undersupply, this EV transition was needed, and everyone thought that rare earths were part of the motors of EVs, but they're actually they're part of the batteries, but they're actually part of the motors. So a lot more drive there. They're in wind turbines, they're in lots of different areas. There's applications across the board. So I think at the moment we're working through a supply overhaul at the moment. So when we get that down, we're going to see an uptick in NdPr and the demand for rare earths is coming back. So, well, that's kind of where my eyes are looking at the moment, but also we can't go past copper. Like, copper is, I think, the commodity of the minutes. I'd like to say gold isn't, like, gold, of course, is just top is gold, and it's going to be for a little while to come, but I think copper is very undervalued on the market right now. You see a lot of the copper miners, copper producers, and learning that a copper mine takes 17 years to come online. Like, it's not an easy mine, whereas lithium's 4 years. So you just compare the two and you look and go, there's a serious undersupply coming in copper, and there's not enough high-grade copper coming through. And so copper's not just used in EVs, it's in energy transition, it's in the AI movement, it's in digitization, it's in everything. So you look at that and you go, why is there not why is the markets not seeing what we're seeing? But I think it's up to us to kind of put the word out there that copper is seriously going to be undersupplied soon. What do you see?
Well, first of all, on the rare earths, I agree. I think that's a really interesting space because it's so hard to bring, I mean, a gold mine, maybe 10 years, lithium mine, 4 years. We're just talking broad averages here. Copper mine longer than that. And that's typically because copper mines tend to be much larger and have longer lead times and things like that. But a rare earth production facility can take even longer than that. It's a complex thing to sell. But we're moving into a world where those uses are becoming more prolific. And the geopolitical tensions which are sneaking out, I mean, you've heard Donald Trump, and it's always hard to tell with him, you know, is it real or not? Steve Bannon, his former advisor, quite famously said, the biggest real enemy in the world is the media. And the way that you flummox the media is you just completely flood it with absolute shit. So you've got no idea under Trump's strategy of whether or not what he's saying is what he's actually going to go through with. But every so often, you know, something sticks. Some of the things that he's gone on about the most since becoming the president, or even, you know, in between the election and being inaugurated, was, well, we'd really love Greenland. And really interested in getting some rare earths out of the Ukraine. And I think both of those themes just tie together with that rare earth story, because the US wants to detach itself from a production, you know, supply chain that comes out of China, gain some independence. So to me, the angle on Greenland, but also the kickbacks from Ukraine for all the financial support they've had in their conflict with Russia, to Trump, they seem to have rare earths at the centre of it. And here we sit in Australia, just to put a bow around that, with there are deposits of rare earths here. Lynas is a producer. They've been a really interesting bellwether for just how easy or hard it is to maintain that production. And now we've got, you know, we've had people discovering things. A couple of days ago, there was an enormous resource, clay hosted, that went into resource in Western Australia, which is sort of midway between Lynas and between Iluka, who are both building downstream processing facilities and are going to need potentially extra supply.
Now,
so
on Lynas,
interesting.
Gina Reinhart buying up some shares recently. I think a lot of the market likes to see what she does and what she gets into. So interesting there that she was going so hard at the Perth Basin through all of the gas producers there. Now shifting focus a bit to rare earths. Do you think she sees something there?
Well, she was sitting next to Donald Trump, wasn't she, at Mar-a-Lago on election night? And that in itself is fascinating, because her investment strategy, who knows? I mean, I've mocked it a bit myself privately, but
so have I. Don't worry.
there's things that she does, and you wonder about how well informed, or at least she thinks she is. So to see her buying into rare earths, having just been sat next to Donald Trump, who apparently is considering US territorial acquisitions on the basis that might be tied up, I think that's fascinating. So, you know, the story for the next 10 years, I'd say keep your eye on rare earths, but that could start.
And the price has rebounded of NdPr, spot price has come back up, so that is definitely one to watch. But copper, what are your thoughts?
Well, copper is used in everything old world. It's used in everything new world, so it has a fantastic demand story. The thing with demand is just how quickly it comes to bear. And the supply side of that, you know, what people have talked about is it's hard to find new sources, particularly large new sources. We know that across the market, if you just break down the ASX population of explorers, you'll find plenty of golds, but very few actual genuine copper contenders. So, you know, it's a hard space to get an equity exposure to, and I think that speaks to the rarity comparatively of projects. The interesting thing, if I contrast, say, gold where we started and copper where we are now, is that if you were to look at their prices, say, from 1970 onwards, and the 1970s was when many prices became detached from controls. So, you know, you set something free in the 70s. Lots of things got set free in the 70s, didn't they? But
I wasn't alive, so I can't speak to that.
I don't have a very good memory of it either, I'll assure you. But, so go back to that period of time. Copper has returned about 35 times on price in that time. Gold has returned about 70 times on price in that time. So they're markedly different. And I think the reason for that, if you look at any commodity other than gold, you will find that it ticks up to a point and then it hits a level and it corrects from that. So this is what happens is the people who buy copper in order to use it feel the pain of the price. They get to a point where they can no longer pass that price on to the consumers of it. So I look at the copper price and I see at least 3 substantial roofs in that. The most recent roof, which we're actually only about 15% below at the moment, was defined when the Chinese came into the market to move the price for every single commodity.
Honestly.
And we haven't broken out above that in almost 20 years now. So for copper, I think that is showing that it's a resilient commodity, and it's got to be an interesting place to be for that reason.
Yeah.
But then gold is unconstrained by anyone feeling the pain of it. The price of gold is dictated by what people are prepared to pay.
Yeah.
And at the moment, you've got central banks which have bought a lot of gold. They probably don't want the price to go down. But if you're a central bank and you had a buying strategy, you'd be like, we need gold. That's the reason you're doing it. Not because you think the price is good. It's because you need it and you want it.
And diversifying what you have. Like you are tying away from the US dollar. You're wanting to get that diversification of what you own. So.
And when was the last time that the Chinese went into a market to buy anything with a 12-month strategy?
Literally. Yeah, exactly. So, but I'm interested to see with the gold miners, I think, because obviously you're getting asked what's the price of gold going to hit, and so am I every day. And at the moment, hedge books are seriously closed. Like they're locked up. They're put in the basement for a little while. But I think as soon as we start seeing hedge books come out, that's when you kind of signal. That's the signal that the miners themselves are seeing a kind of a downturn in what we're offering. But it's looking pretty good for a while to come. Hedges haven't been spoken about for a little while to come. So it's as good as gold.
It seems that that's been a financing artefact. So if you want to build a gold mine, the banks will probably ask you to do some hedging. And if it's limited to that, in order to protect your revenues, that's, at least it limits it to a part of the sector. When interest rates creep up, and we never got high enough for a gold future price to really knock it forward and the gold industry to say we need to be selling forward to get a better price. There is a contango on gold, but gold price is performing so strongly at the moment that by the time you get to the point where you're actually going to deliver into it, the gold price has defeated that. So
that's what was Regis. They paid off the hedge book in December because it was December 23 because the price ran so hot. So hedges are definitely out of favour right now. And I know Evolution Mining results out yesterday, record results there. I had to talk about it on 2GB last night. And looking at their production, they had 388,000 ounces of gold, but 38,000 tonnes of copper. So the diversification there is really attracting investors on that front. When you're looking at a miner, you want to look at what else they're offering. If they're offering a single commodity right now, that's still a really strong strategy if they're really nailing the game there. And I can name a handful that are in the room next door. But if you're diversifying and offering two revenue streams, that also offers that de-risks them in a way. So I guess that's what we looked at. And having enough money in the bank, having low cost, that's the metrics I'm looking at this reporting season. So I know Evolution came in 1,600 per ounce in all-in sustaining costs, and the average sale price was 3,700 Australian. So good margins there. So marginal expansion is what you want to look for in this current environment. So reporting season is all my brain's at right now. But
fascinating though, isn't it, that a company like Evolution, their average price of sales was 3,700, and you think about where the Aussie dollar price is right now.
Exactly.
So that's an average, which just shows you how fast the gold price has moved.
Exactly.
If they'd sold everything at spot at the end of that period, imagine what those financials would have been.
Well, what's it at now, Australian? I know US 2,900.
No, I didn't check it this morning.
4,600. There you go. Sorry, I work in US dollars, so I'm like, what's the conversion rate right now? Like, we have to talk lithium. I know a lot of people in here would think, where the hell is lithium going? So we'll digest it for you. We'll try to our best to get on top of the lithium story. So
I'm just looking at the door and making sure nobody's leaving.
Can we shut the doors? No, I'm kidding. Sit down, stay put, buckle up. We'll dive into lithium.
Well, I think it's fascinating, isn't it? Lithium was the story in 2017. And then it wasn't. And when lithium stops being the story, it really isn't. And then it was again in 2020 and 21. And it hit a peak price. It went up. I mean, the commodity performed by so many multiples in such a short period of time. Now, whether or not that was a warning, I don't know. But the fundamental was
it's just never sustainable.
There's going to be huge demand into batteries. And I think that demand picture just hasn't caught up nearly as quickly as it needed to. So lithium is still a story of something that we need. But the question is, what is the price on an average over 5 years of what it should be? So,
well, I think looking at it, we're looking at the rebound in price in FY 26-27. So carbonate, spodumene, hydroxide, all of those. I think spodumene and carbonate are expected to turn around end of FY 26 because the supply is now running out that we have. But spodumene concentrate is FY 27. So at the moment, we're seeing this is kind of the bottom. We're seeing this is the bottom of the bottom. It's going to rebound in about 2 years' time. Not even 2 years' time.
Grady picking a bottom here.
I'm actually calling the bottom. I'm saying that there's enough demand, there's enough need for the commodity now. Supply is running out. Having talked to a lot of the lithium miners, that's what we're seeing, and even our analysts are kind of seeing that right now. So we're seeing that it'll hover around this level for a while to come, but while we work through the supply, then the demand's coming back. But look at Pilbara Minerals. They've managed to really nail it and get through this really downturn in the market, maintain their shareholder value, and also venturing into into the downstream processing. That's where the margins are made. So if you're in lithium and you're not in the downstream processing, turning it into actual lithium for the batteries, then that's where you're kind of coming under pressure. But Pilbara Minerals, excellent business right there.
So an interesting thing about lithium then is that a lot of people's emotions will be attached to what the peak prices were in 2021.
Yeah, exactly. It's not going to...
There's a lot of production that got shut down.
Yeah.
It's in care and maintenance or close to production, so it could be brought back. So when we think about the price that is sustainable going forwards...
Not what it was.
I think of margins in producers as being something which should have a sustainable average over time.
Exactly.
At the moment, we've got massive margins in gold.
Yeah.
I think to myself, how long will it be before costs creep up and start to close that? But in lithium, people who were pulling lithium out of the ground in 2021 were getting so if there's a margin in total between taking it out of the ground and sold into end use, into a battery that's this big, typically the technological add-on should be about that much, and maybe the specialised processing that. So there's a margin here.
Yeah.
But it seemed that the people who are selling concentrates were getting so much more of it.
It's not sustainable.
Which felt unsustainable. But I think for that to rectify, maybe a multiple or two on lithium as it is, which probably puts a lot of the spodumene players back into cash, but not Brazilian.
No.
That's a number which is above billions and trillions in terms of cash generation.
Yeah, exactly.
Makes sense to me. So I think, there's a lot of people who are despondent about it, but even... Your friend who you mentioned before, Gina something or other, she was very big on lithium, like she bought into Liontown. She defeated a takeover literally by just buying enough stock.
Yeah, exactly.
And people probably don't thank her for that, but I suspect, go back to the Mar-a-Lago conversation that we were having before, does she know something, does she think something about where the US want to source production from? And perhaps she's getting ready for that. Yeah,
so lithium, the outlook is there. And I also think that everyone thought the EV green energy transition was going to happen so quickly overnight. And then we had all these battery fires and I think the game was rushed way too quickly. And so now we're kind of pulling back going, I don't want an EV car. Do you want an EV car? I'm pretty happy in my Toyota right now.
Well, I drive a Land Cruiser, and people who drive big Land Cruisers don't drive EVs.
They don't drive EVs, exactly. So I think until we see a stabilisation in the market and stabilised demand, we do expect demand to increase over time, but until we see that, they're safe, they're good, it's the way forward. It's not going to really drive demand anytime soon.
Do you think, just to turn to US politics for a moment,
can't wait,
that there has been a sentimental shift here? I mean, if you were in the market for an EV and you said, righto, I'm a consumer, I'm swayed by emotions, and now we have a person who's trying to define themselves as either the biggest or the second biggest dickhead in America at the moment, who runs a company that sells EVs. Do you look at that and go, well, I might have been in the market for a Cybertruck, but I'm not anymore?
I wouldn't buy a Tesla purely because of Trump and Elon Musk. I'm like, just
so I think that's a factor too, right? Because this creeps in. The Chinese have flooded the market.
Well, build your dreams. BYD is the biggest EV brand in the world now, much to Elon's disgust.
So commodities, Grady, we've covered a lot of things there, but there's a couple of big themes in the market at the moment. I've got one at the back of my mind. I reckon you must too. So let's go high level. What's big for you in 2025?
China. We've been talking about it for 2 years now. They've come out of lockdown 2 years ago, and the China recovery mode has been coming for 2 years, and it's still coming. The stimulus is not enough. We haven't seen material flow through from what the government is saying and the banks are saying, we're putting all this stimulus into China. Their latest readings, I've got them here, inflation only rose 0.1% in December. And that's a place you want inflation because their economic contraction is so strong right now.
I'm glad they're inflating rather than deflating.
Same.
That's
I want to see inflation there, which is a wild thing to say because we're like, tame inflation. The balance of trade surplus rose to 104 billion in the last trade, which is good. So more exports and imports, which is good. Imports rose 1%, but exports soared 10%. So it shows they've got factory productivity going again. Another good thing. GDP rose and exceeded expectations in Q4, 5.4%. So this is the first time we've seen a material kind of shift that excited me when I saw Chinese data come out because it was always 0.1%, 0.2% down, 0.3% up, 0.4% down. And so it was this real roller coaster for a while. But now we're seeing material numbers come through. So I'm excited by this because any companies with exposure to China, i.e. our biggest miners in the world and our biggest miners in WA, have had really deflated times and really this has impacted earnings over the last 2 years because of the impact China has had and the deflated nature of China has had on commodity prices. So when we see an inbound and a turnaround in economic data, it's about 2 months before it flows through to actual material demand in commodity space. So that's what I wanted to see. I wanted to see a material turnaround in China. I think it is finally starting to flow through. I think more stimulus is going to be needed, but what we're seeing is a good start. So a great start to 2025, albeit 2 years too late, but it's a good start. So now I'm expecting this to flow through to our commodities coming forward and our miners. And I want to see the shipments and all of that increase over time, but I think for now it's a good start. What are we talking about?
Well, you could send a letter to some of your friends you were mentioning before. I want to see shipments, all right?
I want to see shipments.
Can I ask you a question before I...
Yes.
My big theme. Is it too soon on this big economy concept to talk about India? Or is that something that we come back in 2026 or 27
India
and say,
is definitely growing. And I think there's a company called Findi, and I'm going into financials here, but it was one of the top performers on the ASX last year. It's an ATM company. They service ATMs and have ATMs in India. I spoke to the CEO, I said, are you going to diversify and go anywhere else? And he said, I don't need to.
Yeah, why would you?
I literally don't need to.
Can we not punt stocks to this audience
now?
No,
sorry.
You're ripping away from line stock.
Sorry. That's just the story. So India is still growing. India's kind of this new story and this new wave and this emerging economy that not enough people talk about. So I think India is definitely emerging. In the commodities space as well, I'm excited to see where it kind of takes its place. But yeah, talk to me about your big theme.
Well, my big theme is M&A. M&A in the mining space, and I think it's a bargain hunting driven exercise. And the question is, well, why 2025? Why not 2024?
Yeah.
It was starting in 2024, but typically M&A cycles have a big wind up where people are getting ready. They're looking at things. They're going, are our margins defensible? Do we have enough cash? All those kinds of things. I can see this across the market. I know a number of companies are looking at each other, so that sort of confirms my belief. But when you've seen a sector which is so downtrodden for a long time, when the industry starts to feel it's getting better for us, when BHP starts to feel its margin expansion underway, or when Northern Star starts to feel its margin expansion underway, or we've got our CapEx cycle under control, they start to look for growth. So, I mean, Northern Star has put a stamp on this with a bid for De Grey. That looks like that'll be a large consolidation in Western Australia. But then, you know, in gold, just on its own, there are enough processing plants through the thickest parts of the gold fields in Western Australia to not need to build another one. So if you have a large resource, you've got two exit points. You can either build one, or there's a potential outcome where you get bought by somebody else. And I think that's probably something which we will see in 2025 as these inquiries starting to thicken up. There's a need. There is a definite financial ability to do it. And as these mines switch towards growth, it'll definitely be the driver. So.
Do you see that, like what I'm seeing in the M&A space right now is one company will go for a takeover, and then all of a sudden 7 other suitors come out and just go for it as well. Like look at Bells right now is trying to take over Self-Wealth, and someone in Singapore has just come and put a bid in. Someone in Malaysia's put a bid in, but we were the first to the party. And Insignia Financial, same thing. You've got 4 massive global PE companies going at it. So do you think in the mining space this will come as well? Like one suitor will come up and then they do the hard work and then everyone's gone, oh, I want a piece of the pie too.
Well, this is something which acquirers are very, very cautious about because you don't want to spend all the money on lawyers and advisors and then go out into the public market and
do the hard
put
work
your best
for
foot forward and then someone goes, well, that's all right, I'll just top your bid. So, you know, I think there's a lot of strategy that is going into M&A thought at the moment about how you can put your best foot forward but also tie them up in knots so that it makes it hard for anybody else. But let's put some names to it, right? Through last year, we saw a couple of headlines where we had Ramelius going for something or Westgold going for something. Those two are the classic big two competitors now in Western Australia because they are both frantic to grow and become the definite third largest producer in Australia. So for one of them to make a big acquisition next will probably cement that. Westgold caught up somewhat by taking over Karora and then, you know, to coin an expression which I often hear, went on to shit the bed. And, you know, so in terms of being the third biggest, Ramelius is it at the moment because, you know, Karora got acquired by Westgold and then Westgold has come right back in share price. But let's fast forward 12 months. They're probably also still looking at a multitude of other things, both of them looking at them, and only one of them can own them. Ramelius possibly has the ascendancy and one of the biggest potential targets with large amounts of high-grade gold in Western Australia. You'll have to wait for Simon to tell his story later on. But, I mean, Spartan is 19% owned by Ramelius. So, you know, everybody wants to know how's that going to work out. And that's a combination which could cement that, you know, third biggest spot.
I think that's a question anyone in the room can ask Simon down the back later on. He's just ducking down now.
Go see Simon and ask when it happens.
But I think as well, like, takeovers will be quite cautious now because look at IGO and Cosmos Nickel Plant. Like, that's gone. That was a massive premium paid for that and then straight into care and maintenance. So I think there'll be quite caution around that. But let's quickly talk about AI. What are your thoughts on AI?
Well,
we have to talk about it. It's the theme of the year and it's the word.
I'm a technophobe and
Still got your Nokia?
I work with a guy who's great with AI, and what he uses it for is to make pictures of women with my face on. So as far as, you know, I'm sure it's going to change the world, but so far all it's doing is really pissing me off. But I buy that, you know, you can rapidly run research by running, you know, thought experiments with AI. You can use it to cut corners and all sorts of other things.
It's amazing.
The thing which I wonder about is if AI is going to be so big, but it needs to consume so much energy, so much copper, so much other resources.
Water, talking about water.
How is that consistent with the way that the world supposedly wants to be? So it's a real way off of, is it a good thing? Or is it a good thing that we have to have? And is it a good thing that we have to have that we can support with that's also consistent with making the world greener? So
literally, ChatGPT 3 was estimated to use 700,000 litres of water. And if you look at data centre cooling needs, millions of gallons a day.
Gallons?
Gallons
a day. What the hell is a gallon?
I don't know, but it's a stat. Don't question my stats. I'm like...
Well, let me give you an AI theme here, right?
This is nuts.
So the biggest company in the world, or at least in the S&P 500, NVIDIA, it's a chip manufacturer, but you need lots of chips for AI, and that's why they've come to the ascendancy, become such a big company. When NVIDIA had a bit of a stutter the other day and went down 9%, the amount of market cap that was wiped off that would have bought most of the whole of the global mining industry, just like that. So NVIDIA goes down by an amount that you might go, oh, well, I can look through that. But that's how much money is tied up in AI.
It's nuts.
Yet, the realising factor is access to commodities and all of those things to make that happen. So, you know, extrapolate this over 10 years. Has the global mining and commodity production sector said, well, I tell you what, NVIDIA, rest of you AI guys, you're doing a really great job, but you're going to need a fair bit of copper. So we'll sell it to you and we'll even guarantee its quality, but it's going to have to be at like somewhere between 2 and 3 times the price that you're paying at the moment. So how about we all work together and make the mining sector bigger? Now, there's a lot of collectivism which would be required to do that. But, you know, you think of some of the people that have, you know, really changed pricing paradigms in the past, and there is an opportunity there. So one way or another, this margin sharing, creating such a margin in AI, commodities could have a chance at a clip there. So.
Quickly, because we've got 1:57 left. Any names you're looking at right now?
I don't like giving stock tips, but
I know you don't.
I don't mind. I mean, there's a bunch of companies here today. So how about I say, Here's 3 companies.
Sounds great.
And here's a quick question that you can ask the MD.
Yeah.
So, first one that's on my list is Astral Resources. We've got Mark Chocolates Duclair down the back there. Ask him why they call him Chocolates and why you want chocolates today and not chocolates tomorrow. Mark's making a takeover. That will add to the company. People often go ounces plus ounces. I think go and ask him and say, just talk me through how this streamlines your business and makes it a better place, because I think there's a really great answer to that and you've got to hear it. Second one, Firetail Resources. Let me be honest, they gave me a cup after a pitch battle that they won. But they're in Canada, they're buying a project. We've seen companies make a real fist of this. So go and ask, what are the Canadians missing? That's a great conversation starter, because I think that extrapolates everything that's good about the project there. Last one, Legacy Minerals, a couple of terrific guys at the booth there. So go say, you've bought this project in New South Wales, it's called Drake, it's absolutely chock full of data. What are you seeing that others have not managed to capitalise on in the past? And I think you'll be pleasantly surprised by the talk through there. What about you, Grady? You got any companies for us?
I don't like to play favourites here, so I thought I'd bring some that Bells are looking at elsewhere. Sorry, Reed Corporate. AIC Mines is Dave Coates' pick at the moment. He's looking at, they're producing, they've got, as we were talking about this morning, Eloise Mine. Copper. Sorry, it's copper, everyone. Copper in Queensland. So naturally, that's where my vision goes right now. They're producing, they have a lot of potential. They've got a pretty good cash balance right now, a good management team, and that's kind of what the metrics you're looking at. I'm sorry, we've got 10 seconds left, that's why I'm flying through it. And we're still bullish on uranium, looking at like Boss Energy, Paladin Energy, we've still got buy ratings on them. So we see diversification of Boss's assets right now is what we like to see. So thank you. I hope you enjoyed our fireside chat.
Grady, nice work.
Lovely chatting to you. Good job.
Thanks, folks. Thank you, Nicholas.
Thanks, guys.